Remember the patriotic millionaires. They're so patriotic that they're all for the rich paying higher taxes, even though they are millionaires themselves. Well, one of them, he's back with us. Eric Schoenberg is with us. Eric, welcome back. It is good to see you, sir.
Good to see you.
I totally disagree with you, and you're utterly wrong, but it's great to see you again.
Great to see you, yeah.
Now, the President has proposed yet another round of increases in the taxation of rich people. Okay? Mm-hmm. You approve of this as well? You're prepared to pay even more on top of the extra taxation of the rich that's already been imposed?
Yeah, well, let's be clear about the context of this conversation, which is we do have a deficit issue. We're going to need to do some things to get our financial house in order. And my position all along has been that I'm not opposed to cutting spending, not at all. But my position is if we're going to have shared sacrifice, the wealthy, who have done very well out of the economy over the last 30 years, should be ones to contribute.
Okay, so you already on January the 1st, the income tax rate on wealthy people has gone up. Mm-hmm. Okay? The President now proposes to raise taxes on the rich in other ways, mm-hmm. capping deductions, IRA caps, etc., but extra taxes on the rich. You're prepared to go even further and pay these extra taxes. Is that correct? You're prepared to do that?
That is correct. And let me also point out, though,
when is enough?
He's not suggesting raising marginal rates any further.
I know he's not. But
now he's suggesting something that was, in fact, proposed by the Republicans in the last election.
And you're prepared to do it?
Absolutely.
You're prepared to pay?
Yeah.
So when is enough?
Well, you know, that's not an easy question to answer. I think the right way of thinking about it is thinking about what government needs to do. What are the functions that government needs to do? And then providing sufficient funding for the government in order to fulfill those functions. For 30 years, right. We have not done that.
Okay, let me explain. I'm not trying to explain something to you. I'm going to tell you. If you took every penny of income over $250,000 that any American makes, every last dime that they make over $250,000, you take it as a 100% tax rate, you would bring in $1 trillion a year. You'd still have a deficit. I would suggest that is enough. No?
I'm not quite sure whether you're suggesting.
What I'm saying is,
I certainly wouldn't be in favor of taking a 100% tax rate.
You can raise taxes all day long on the rich. You will not eliminate our deficit. And you will hurt the economy. You've already hurt the economy with the tax increases on January the 1st. You have.
There is no single action that the government is going to take that's going to close this deficit, neither on the spending side or on the revenue side. This is basically the point, is that we're going to have revenue contribution. Now let me go back to the question. You know, what is enough? The fact remains, even with the current increases in tax rates, of course I won't know until I actually produce my taxes for 2013, but I strongly suspect I'm still only going to be paying taxes at a rate of about 20%. Okay. Is that too much? I don't think that's too much.
Here's how you actually do raise revenue and close the deficit gap. You lower tax rates, so you get more economic activity, you get growth. That brings in more money to the Treasury. That's the way you do it. You don't raise taxes, you lower tax rates. That would work.
Well, I think we agree that the best way of solving the problem is increasing economic growth. The question of what policies are going to increase economic growth, of course, is an
do you think that spending more government money raises economic growth? It does not.
I think there are many things. I think there are many things the government spends on that does in fact raise economic growth.
We spent $1 trillion.
Let me take a particular example.
We have not got economic growth. Over the 4 years of the Obama presidency, we've averaged 2.3%. That's it. Mm-hmm. And that's why we've spent all this government money. We have not gotten growth. You want to spend even more, and it's not going to give you the growth that we need.
Well, I would go back to the 1990s when Republicans complained vociferously about the Clinton rises in the tax rates, and we had tremendous growth in the 1990s.
You don't need to go back to the 1990s. You're going to go back to 2008 from there on out. You spent a ton of government money. You didn't get growth. You're asking for more of the same. But it won't work.
Let's go back to what's driving this. The part of the driver of this is sequestration. So what are we doing? We're cutting spending. We're cutting spending on things such as research, fundamental research. research. I work in academia. Let me tell you, there is going to be a significant reduction.
We're talking big picture. The last quarter of last year, there was virtually no growth. 0.6%, that's all you got. First quarter of this year, maybe 2% growth. That's got nothing to do with sequester whatsoever.
But by the same line of argument, under the Bush tax cuts, we also had very poor growth rates. So the idea that lower tax rates lead to higher growth is invalidated by what happened within the last decade.
Last time you were with us, I asked you if you were willing to pay more in taxes. You said yes. I asked you to produce your checkbook and write out a check right now. Did you bring it with you this time?
I did not bring my checkbook. I have a credit card,
because you were expecting me to ask you to write out a check, weren't you?
I know you're going to do this, but the fact is, taxes are not a voluntary system. We don't believe in letting people voluntarily decide how much.
Oh, no, you're telling me how much I've got to pay.
I'm telling you how much we both should be contributing. And by the way, I would go back to a point I made last time.
I've got a hard break. I'm out of time. You got it? Go to the break.